Here are the crypto top headlines covered in this video. Court denies Kraken's motion to dismiss SEC lawsuit. Next, past rate cuts indicate potential crypto bull market catalyst, says 21 shares. Also, Synthetix betting on new multi-collateral perps ahead of Arbitrum rollout. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: Court denies Kraken's motion to dismiss SEC's lawsuit. The SEC alleges Kraken is operating an unregistered securities exchange. A United States federal court denied crypto exchange Kraken's motion to dismiss a Securities and Exchange Commission lawsuit alleging Kraken is operating an unregistered securities exchange, according to an August 23 court filing. In November, the SEC charged Kraken with operating Kraken's crypto trading platform as an unregistered securities exchange, broker, dealer, and clearing agency. The SEC has plausibly alleged that at least some of the cryptocurrency transactions that Kraken facilitates on its network constitute investment contracts and therefore securities, and are accordingly subject to securities laws, according to the opinion of the U.S. District Court in Northern California. The ruling is a setback in the industry's ongoing tussle with the SEC to define which cryptocurrencies, if any, qualify as securities under U.S. law and therefore fall under the SEC's jurisdiction. Once again, a court confirmed that the framework used to identify securities for nearly 80 years still applies regardless of the labels used, an SEC spokesperson said in a statement. Investors in crypto assets offered or sold as securities should get the same protections as investors in other securities, even when they are traded using intermediaries. Crypto trading platforms should register with the SEC and ensure they have safeguards against fraud and manipulation, the commingling of customer assets, and conflicts of interest. Until they do so, investors will continue to get hurt, the spokesperson said. The August 23rd ruling asserts an expansive definition of what constitutes a security by looking not only at any formal investment contracts, but also at the broader context around which instruments, in this case virtual assets, were marketed and sold. Contractual formalities are not required for something to qualify as an investment contract and therefore as security, the court said. What counts is the totality of the circumstances surrounding a sale, trade, or exchange, and the expectations of the investor. In an August 23rd post on the X platform, Kraken's chief legal officer, Marco Santori, said the court actually ruled as a matter of law that none of the tokens trading on Kraken are securities. Fundamentally, the court in Kraken's case made the same distinction as in the Ripple case. A token isn't a security, but agreements around a token could be, according to Santori. As a result, the SEC will need to prove for every alleged transaction on Kraken that the Howey test factors are satisfied. They aren't, and we look forward to proving this, Santori said. Coinbase is embroiled in a similar battle with the SEC over whether its virtual asset staking products constitute an unlawful securities offering. In August, the SEC reportedly rejected an application from securities exchange CBOE Global Markets to list Solana exchange-traded funds on grounds that SOL is a security. According to the SEC's complaint, Kraken's alleged failure to register these functions has deprived investors of significant protections, including inspection by the SEC, record-keeping requirements, and safeguards against conflicts of interest, among others. To deny the motion to dismiss the suit, the court only had to conclude that the SEC's claims are plausible. A final ruling has yet to be made. Let me pause here for a moment. If you're getting value out of this video, Please click on the like and subscribe buttons as well as the notification bell. Our next top headline, past rate cuts indicate potential crypto bull market catalyst, says 21 shares. The Federal Reserve is expected to begin lowering its benchmark interest rate in September. Speaking at the annual Jackson Hole Symposium, Federal Reserve Chairman Jerome Powell sent his strongest signal yet that interest rate cuts are on the immediate horizon. The price of Bitcoin rallied past $63,000 on the news, and analysts think further gains are expected when the Fed begins cutting rates. Lena Eldib, a researcher at exchange-traded product issuer 21 Shares, explained that previous interest rate cuts were good for the price appreciation of digital assets, as investors with cheaper access to loans invest in risk-on asset classes. In a statement to Cointelegraph, the analyst gave a specific example of a previous rate cut at the beginning of the COVID-19 pandemic. In March 2020, when they cut rates by 150 basis points to reach near zero levels, the total crypto market cap increased by about 450% towards the end of the year, and Bitcoin's price surged by 200% in the same period. Eldib qualified her statements by explaining that while past performance is not a guarantee of future results, the March 2020 interest rate cuts could provide a benchmark to compare the likely effects of the impending rate cut on crypto markets. Levels of the M2 money supply as a market signal. The 21 Shares analyst also pointed to changes in the M2 money supply, a measure of the total currency circulating in the global economy, as a potential catalyst for a Bitcoin breakout. Eldib noted that Bitcoin's price usually reaches its lowest point several months before the M2 money supply bottoms out, before surging rapidly. This rapid price surge typically surpasses liquidity growth before pulling back in what the analyst described as a mid-cycle correction. The analyst concluded by sharing her belief that Bitcoin exchange-traded funds were a key catalyst for price appreciation amid the M2 money supply cycle she described. Institutional interest in digital asset investment vehicles remains high. Despite a $528 million outflow from digital asset investment products during the week of August 3rd, institutional interest in digital asset investment remains high, as evidenced by strong inflows into BlackRock's iShares Bitcoin Trust, or IBIT, ETF, and Fidelity's Wise Origin Bitcoin Fund, or FBTC, of $20.3 million and $61.3 million respectively. This strong interest in digital asset investment vehicles is also corroborated by the behavior of investment advisors who increased their exposure to Bitcoin exchange-traded funds during the second quarter of 2024. Our next top headline, Synthetix betting on new multi-collateral perps ahead of Arbitrum rollout. Synthetix faces fierce competition on the DeFi-oriented Layer 2. Synthetix is betting that its ability to accept a variety of tokens as collateral will differentiate its V3 derivatives platform as it launches in Arbitrum's competitive decentralized finance, or DeFi, ecosystem. Matt Los Quadro, a Synthetix core contributor, told Cointelegraph, "Arbitrum is the home of DeFi derivatives. There's no doubt about that. There's a large number of protocols there, and the competition is fierce," Los Quadro said. "The big question has been, why would you use Synthetix perps in a crowded marketplace like Arbitrum? We're going to be launching an Arbitrum exclusive product feature, and that feature is multi-collateral," Los Quadro said. "No one currently has this on Arbitrum, and it's going to be an extremely large unlock." Synthetix is a DeFi protocol specializing in providing liquidity for permissionless derivatives like perpetual futures, options, and more on-blockchain networks, including Ethereum, Optimism, and Base. The protocol launched on Arbitrum in July. Perpetual futures, or perps, are a type of derivative that allows traders to buy or sell an asset at a future date with no expiration. On Arbitrum, DeFi protocol GMX currently dominates the decentralized Perps market with upward of $430 million in total value locked, or TVL, according to data from DeFi Llama. Several applications built on Synthetix specialize in Perps trading, but others focus on yield strategies such as basis trades, Los Cuadro said, enabling users to deposit multiple token types as margin collateral opens up even more possibilities. He added, instead of just margining Perps with USD coin or USDC or whatever stablecoin it may be, when you use Synthetix Perps on Arbitrum, we're going to be able to margin with Ether and Bitcoin as well, Los Cuadro said. Synthetix also plans to integrate Chainlink data streams to its upcoming V3 deployment on the Arbitrum. So yes, initially I think this multi-collateral feature will be a way to compete with incumbent Arbitrum DeFi protocols such as GMX, Los Cuadro said. But it's not just about perpetual futures. It's really about allowing people to build on top of this system in a composable, permissionless way. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.